On today's show, 3 questions. Number 1, does it make sense in Japanese? Number 2, can AI make your business better? And number 3, are you tired of PPOs?
Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Will.
And I'm Rabih.
Yeah, you are. Will.
I'm usually on it for once, Rabih. You're jumping the gun.
Were you trying to go, Rabih?
The first time in 3 years I messed it up. I lost my streak.
Oh
That's
my
big
gosh.
for me. Wow, that is huge for me.
Wow, that is big. This has never happened. I don't even know what to do with this.
That's
do we start
all because
it over?
you
I don't
chose
know.
to change the question, Matt.
Yeah, Rabih was trying to get me to speak Japanese. I refused today. And then Will, this is 2 of 3 today for us, you and me on podcasts. I didn't like how quickly you answered, "Are you sick of me yet?" And you answered pretty quickly.
Yeah.
You were like, "Yeah, like it's gonna be bad today."
Yep.
I'm like, okay. I was hoping for maybe "No, man, I love recording with you." No, you were just
we're gonna be together all next week. And
I know.
It's gonna get tough.
It's bad. It's gonna get tough. It's going to be tough. Yeah, we shouldn't have done this right before our team offsite. We're going to be gone for a few days altogether. So that's my fault.
No, it'll be good.
It'll be good. So let's jump in, Rabih. We are going to talk about, does it make sense in Japanese? Tell us what makes sense in Japanese or what doesn't.
So continuing last week's, topic, I was trying to make sense of why the U.S. stock market reached all-time highs. We had a rebound in stocks that hasn't been seen since the 90s. It is so quick, so fast. Given that for the last 6 months, nothing changed in the economy, but you can add to it just higher oil prices. So it was like, how does it make sense in English? Guess what? Japan also had an all-time high and Korea yesterday. And I'm like, now, okay, let's see if it makes sense in Japan, because in the US did not make sense. So... and I think I have a theory, you guys. Maybe I'm the only one on this planet who's excited about it, but I think I might have a theory. So just to give you a quick refresher on what was happening with Japan, right? Japan is a very old country in terms of demographics. So its productive capability is low. It's not, full with young labor force that is able to drive the economy forward. So they have been stuck in deflation for a while. And to sustain their living of standards, they have been taking on so much debt, a path that the US is currently on. That is why it's so interesting to always look on what's happening to Japan, because at the current trajectory of US fiscal policy, we are heading there. We are curbing, migration in a sense, which is going to lead to an aging demographic. And we are borrowing like there's no repercussions. So it is the same fate. Looking at Japan tells us a lot on what might happen in the US. So with Japan, they have so much debt. 250% of their GDP is debt. And
Where are we at in the US, Rabih? Just to compare, like 140 or something?
Exactly here. So with the US right now, we're 123.
Okay.
Actually, if you want to do a quick comparison between like the US economy and the Japanese economy, year-over-year growth in the US is 2%. We're at the 2% target. In Japan, the real growth in GDP is 0.1%. Like, imagine you're living in an economy that's not growing. In terms of their inflation, the US is, CPI is at 3.3% from one year to another. In Japan, it's 1.3%. And this is probably one of the very few times in the last 30 years where Japan actually has positive inflation. They've been dealing with negative inflation. So they are welcoming of that 1.3% inflation. In terms of their retail sales, and retail sales is a really good indicator of how strong is your consumer. The US retail sale growth is 3.9 to like 4% annually in real growth. Like we are spending in real terms 4% every single year more. In Japan, that's shrinking. And it makes sense it's shrinking. The demographics are aging. More people are passing away than people who are being born. Consumption ability is dropping. So they're at like negative 0.2%. Industrial production, the US and Japan kind of are equal. The interest rates right now in the US are 3.75%, right? This is what the central bank set. In Japan, it's still at 0.75. So think of that. They imagine if we cut interest rates by 3% tomorrow, what would that do to our inflation? They already have it 3% below, and their inflation is at 1.3. Like they're
Dang.
really struggling to stimulate that economy. And then on the 10-year yield, which would affect mortgages, etc., the U.S. 10-year yield right now is like 4.3%. In Japan, it's 2.4%, so almost half of it. And 236% their debt to GDP and 23% our debt to GDP. Our unemployment is 4.3. Their unemployment is 2.6, which all makes sense. They have less people who are there working. It's a country of retirees, if you want to think of it that way. So why did the US stock market go up and make an all-time high, given, which is also interesting, out of all the possible countries in Asia that might be affected by the Iran war, the blockage of the Strait of Hormuz, the fact that oil prices are up, is Japan. Unlike China, where we said last week, they have a lot of coal, they have a lot of green energy, they don't need oil as much. Well, Japan imports 90% of its oil. And a blockade on the Strait of Hormuz, regardless of where they import their oil from, is going to impact them. Prices will increase. And yet we saw an all-time high in the stock market.
Make it make sense.
I don't speak Japanese, but here's what we're trying to figure out. So I've been doing some little research about it. And what seems like happening is that the reason stocks are going up in Japan is not because people expect the economy to do great. Right now, they got a new prime minister and she is pro-growth and she's going to add more debt to the Japanese economy under the promise that we're going to grow our way out of that debt. This all depends on the yen being stable and not crashing even further. What it seems like is that regardless of where the economy heads in Japan, whether the new prime minister's actions actually help the economy or make it tank and put it in a bigger hole in terms of that than they currently are in, her policy of more spending, more stimulating the economy is good to the stock market either ways, regardless of whether the economy does well or does not. And it seems like because of that, because there is a political certainty that, Japan's government is going to spend money regardless of what the outcome is, money is escaping towards Japan because this is one of the few stock markets that is going to go up regardless of what's happening to economies. This is not what we're seeing in the US right now. Right now in the US, if the economy is doing bad, stock market follows. In Europe, the same, as well as in like other emerging countries. Japan seems to be like this safe haven, and it's not safe because stocks are inherently safe in Japan. It's safe because the current levels of stocks are supported by a government that has no path in front of it except to spend, which helps stocks. So they are going up simply because Japan is having its Tina moment. And if you guys remember when interest rates in the US were zero, Tina stands, there is no alternative. The stock market kept churning up. And the reason it was going up in the US, because interest rates were zero, you can't invest in bonds.
Nowhere else to go.
Nowhere else to go. I'm going to park my money in stocks because that seems to be the one that has least uncertainty around it. In terms of the whole Strait of Hormuz aspect and, stock markets around the world might have to deal with inflation. Well, because oil shock, higher oil prices cause inflation. It seems like Japan is the only country where if inflation shows up, that may be favorable, that would be welcome. And they already said that they're going to spend money and keep the stock market afloat. Let's go and hide our money in the Japanese stock market. So what I want us to take out of all of that, the stock market across the globe, in the US or in Japan, etc., might be going up. But this does not mean that the economic fundamentals support it going up. It just means that money chose to go there, to park there for the time being. And the fact that money flowed from one asset to another elevated its prices. And this is why, if you read a lot of articles in the last week and a half, they're saying we are in a position of greed in the market. The valuations that we're seeing across stock markets are not justified by fundamentals. What is justified, lower by 7 to 10% what we were seeing a week ago. Then we had this incredible rally that we haven't seen since the 1990s. How would you explain it? Money is getting parked in a way that can withstand the storm of the macroeconomic shocks caused by the Iran war. and where the economy stands. So where does this put us? If a smart money is going to Japan and is going to the US and it's parking in assets where you can withstand the ups and downs of the stock market, you should probably be following. What this means is that it's really uncertain on how oil prices, when they're going to come down. How will that impact the inflation footprint? What will that mean to a new Federal Reserve in the US next month? You would want to be diversified or in assets that can withstand whatever uncertainty out there. So in 5, 10, 15 years into the future, you are on a good footing and you haven't made a decision at a bad point in time.
Yeah, love it. Will?
Do you have any tourism data? Does it feel like everyone you know has gone to Japan at some point in the last year?
It's on my list.
The reason they have done so is because the Japanese yen, because of the weak economy they're in, has been depreciating vis-a-vis other countries. So if the US gets to a point where, we keep on adding debt and we pass new bills with really fancy names, but those bills don't actually translate to good economic growth, we're going to keep going into debt to a point where the trust in American credit worthiness is going to translate in two ways. Either we see higher interest rates, which in Japan didn't show up because the Federal Reserve decided to attack that and control all interest rates. And you would also see it in the currency. So in the US, we'll see higher long-term interest rates, and then the US dollar will become very cheap for other countries, which means your vacation to Europe is going to be very expensive. This is what happened to Japanese. The Japanese are stuck in Japan because their vacation to Europe or their vacation to the US has become so expensive due to a low Japanese yen that's been falling. That's why the US is actually intervening and trying to keep it at a stable level for the last couple of months. But from the perspective of a US consumer, not a US investor, that's a very cheap bowl of ramen that I'm all up for.
It's crazy. I feel like, I feel like I've seen it. I don't know if they're having like a little TikTok like renaissance or something where they're like, Japan is amazing, beautiful country. I just feel like it's got this hype around it. And if it's cheaper to go, the flight is not very cheap, but if the ramen's cheap
right
when
now,
you get there.
Yeah, it's like to get there is expensive, but once you're there,
it's an interesting thought.
In a long time,
right?
So maybe I got to start thinking about it. Japan's like
bump it up your list.
It's way up my list for sure. Rabih, I'm more curious, and this is maybe more of a theoretical. When you talk about the, how high their debt to GDP is, and where the U.S. is headed, right? We're at 123. They're at a 250 or whatever, somewhere in that range. Where does that end for a country? I know there's the possibility of like a Greece situation from back in the day, but it feels like Japan is far more stable than where from I think as an American being in the US, and when you say we're headed in that direction or all these kind of things rhyme between our countries economically, I naturally think like, how far can that go, and what kind of ripcords are there to get out of that?
This is a really good question, and we don't have an answer because this hasn't happened in history before. Here's one hypothesis. If all countries around the world decided that, we can keep financing each other forever, every single country in this world devalues its currency at the same time, we could run forever. And we could see a future where countries have 500 and 600% debt to GDP. But if all countries have that same amount of debt and it maintains the balance between the economic relationship between one country to another, it is sustainable. And the reason, but will that happen? Will we get to a point where right now we have a monetary world order led by the US, right? And that's why the US is helping to maintain a certain bandwidth by which the currency rate between the US dollar and Japanese yen fluctuates but does not break, right? If we can do this across all countries around the world and not go into trade wars with each other, China, Russia, etc., it could be a situation where that debt is just paper that's being printed, but we all taking it at the same time. So we let it run. This is a hypothesis in the future. We don't know if it works.
Yeah.
But when it comes to countries, like individuals, they'll file bankruptcy, right? And then they'll take a hit on their credit score. And if that can be taken out by bankruptcy, they're going to start afresh. Countries do not start afresh. So with Japan, for Greece, for example, they still have their debt. What happened to it? It got amortized in a sense or rescheduled. So instead of having Greece pay $1 billion a month, let's make it $250 million a month. And instead of you having to fulfill all your duties within 20 years, let's make it 100 instead. So you restructure the debt of a country to allow it to kind of recover along the way and ease the burden of the high interest costs on top of it. That happens if your lenders allow that to happen. Who are the main lenders of the US? Number one lender is the American public, like us, the taxpayers. Number two, internationally, is going to be like Japan and China and Europe. Will those other world powers allow to the restructuring of the US debt going forward? It is possible. In the past history, whenever a country had debt issues, it is the fall of that country. Nazi Germany had so much debt, but it never had to pay them. Why? Because it's not there anymore. The Spanish Empire had so much debt, it never had to repay. The Roman Empire, the Byzantine Empire, the Ottoman Empire, they all had so much debt. They never had to pay them because you had a complete and total regime change where they issued a new currency. And they said, oh, we're not the new people in power said, oh, we're not the ones who borrowed that money. Your loss. So debts disappear either through a restructuring within the same regime or a complete reshuffling of the entity that took that debt, where it gets disappeared along with a national political identity.
Makes sense. And then I would imagine another way, and what I've, another kind of angle of this that people argue would be growth, producing yourself out of this debt, right? Would that be maybe a clearer path then and less risky path than this just bank on the fact that the creditors or the lenders are going to be cool about it? Can you talk about that a little bit? Like what growth looks like?
Yeah, this is exactly what all politicians promise. And this is exactly what the US has done the last 2 times it was in so much debt. The US was able to grow itself out of the debt after the Second World War, simply because we had so much productive capacity. Although we had a lot of debt due to the Second World War, we were able to produce so much and transition people's living standards from a very low point to a very high point. We grew our way out of debt. They also did it in the 60s to the 80s when, with Nixon getting rid of the Bretton Woods Agreement and then saying, well, the US dollar is not pegged to the gold anymore, which allowed us to print money and create inflation. And inflation is kind of a way of growing yourself out of the debt. So those could happen. This is the cleanest, nicest way, but it's the hardest to do because you actually need to get the politics and economics straight to grow the economy in real terms.
Yeah.
After that would be less favorable stuff like raising taxes.
The good thing is it feels like we're in a political environment where everyone's getting along really well. So it just feels like now's the time to really grow, like just kind of get everyone rowing in the same direction. It just
I
feels...
haven't heard of a trade war in a long time. Yeah.
No, I don't even know what that is. I've never heard of that. And it just feels like everyone's like really on the same page across the board. Doesn't it feel like... I'm glad Rabih picked up immediately my heavy sarcasm there. But anyway, I'm glad you went through that, Rabih, because I think it's helpful to hear that of what those options are. Because I think there's always talk of this
looming debt.
This looming debt that's been growing since the turn of the century. Every single president has added to this over the last 26 years. And it's a topic of conversation. To your point, Rabih, every politician talks about it. It's just that nothing's being done about it. It feels like we're kicking the can. And I just am wondering. Easy. Oh, for sure. Not easy. It's easy to talk about at a pulpit as you're, rallying your people, but it's really difficult to execute. So anyway, I was just curious, like even theoretically, where could this possibly end? Rabih, or Will, any other thoughts or questions from your end on this topic before we move on to AI?
Yeah, I've never heard the TINA acronym, so that was cool. I'm going to start using it. There is no alternative to my kids when I'm like telling them to go to bed. I just say it's TINA.
Oh, yeah. I like that. Ooh, that's good. We were just talking about the issues of being a dad with little kids and battling them on dessert and stuff. It's like TINA. Sorry. It's like put some broccoli in front of them and be like, TINA, guys, TINA. I like that. Okay, that's great, Rabih. Anything else, Rabih, you want to add?
I hope it made sense in Japanese, or else we'll have to speak, I don't know, French next week.
Yeah, I like it. It was really good. All right, Will, talking AI, and there's a couple of entry points to this, but Rabih kind of got us thinking about this before we even got on to record. Rabih, do you want to quickly share your your experience today?
Well, I went to my, routine hygienist appointment this morning, and we did an x-ray because I think you do it once a year. And then I was looking at my teeth on, in black and white. And suddenly I started seeing some green boxes and red boxes on top of certain parts. And I was like, what is that? And they were like, oh, this is our new AI software that's identifying where you might have cavities. It's like, this is cool. But how much do I trust it? Like, did you calibrate it to tell me that I have more cavities than I actually do, or does it actually find it? So, and I literally came and told you about it, guys. It's like, my dentist has an AI now, and I'm super excited about it.
Yeah, this is a perfect topic for 2 cents. I mean, we're on this cutting edge of AI disrupting all industries, frankly. This is a dental podcast, so we're going to talk about how it's disrupting dentistry in a way, but it's been cool to watch. It's been an interesting thing to watch unfold over the past, 6 months, basically, it feels like. 12 months, maybe. I don't know. But it's just these companies coming out of the woodwork that are creating these tools to utilize for dentists to hopefully make, well, the question we asked, like, is it going to make your practice
better, make your business better?
Yeah. And I think, like, the answer is yes. My overarching take on AI is that the AI products on the market today aren't necessarily great decision makers, but they're really good helpers.
Yep.
And I think that applies to the ones that we use in our business, the ones that we will continue to use in our business. And maybe those will continue. Obviously, those will probably continue to evolve. But for dentists, I think it can be amazing helpers to start influencing the way you practice. I think the data that we pulled up was that 1 in 3 dentists are using some sort of AI inside of their practice, which is, so a lot of you guys are listening to this probably thinking like, yeah, we already are doing this, or this is obvious, you guys are late to the game or whatever. But I think there's a good subset that still haven't adopted it. However, I have a specific client who I'm thinking of who was just on like an Instagram the other day that showed up on my feed, and he was talking about how he uses it for, like Rabih said, imaging diagnostics, scheduling, front desk automation. Like I think he listens to all the consults, like similar to how on our Zoom meetings we'll have like a little AI agent that transcribes the meeting and then tells us the notes. Yeah. I think a lot of dentists are using that now to transcribe the consultations with their patients. And so they don't have, like, they can be present with the patient, which has been awesome for us to be present with the client and not having to like jot down notes and remember everything after it's been a really huge value add as a helper.
Huge.
So,
yeah.
You guys
thought? I look at it very similarly, Will, to, in a lot of ways, what we do and how we're thinking about AI in our own business and how we're interacting with it. The same thing that you're describing. Like, I think it's just a really great tool, and it's only getting better, but there's just certain things, and I could be totally naive on this, but I just don't see it being like, there's certain things it just won't replace, or it's nowhere near close to replacing in dentistry and in our space. But there's a lot of great tools with it. We talk about it all the time in our business and how we're using it. You just gave a great example, Will, of something as simple as enhancing our ability to be present with a client or a dentist on a consultation or whatever it is, because we have that running in the background. Like, I look at that as nothing but positive. That's actually a really great enhancement. And I'm sure dentists are feeling the same way. And I think another great example you used was it listening to their phone calls and being able to extrapolate all that data. I imagine there's dentists out there that are recording case presentation discussions. And once you get enough data, you can start to have the AI review and say, summarize what was said. Like, maybe you've got multiple associates, let's say, and you've got the AI reviewing each one of your case presentations between all your producers, and you start to figure out patterns of like who's saying what and who's closing at a higher clip. Like, there's a ton of stuff around that kind of stuff, data analytics and helping that. But I'm with you. I think it's an amazing tool. It's only getting better, but there certainly are some limitations there. But I'm going to guess Rabih's got some takes on this.
There are going to be limitations, and I feel like we're going to get to a point where we're going to have AI for everything. A lot of the value decision would be, which AI do I have to choose? Just like walking into a grocery store and you have so many different types of snacks, and you're going to pick the snack that probably is healthier than the others. So we're going to have commoditized AI in the future, just like we have commoditized everything around us. So a dentist can, walk into that supermarket aisle of AI, start throwing in their carts so many different AIs. Not all of them are going to be good. Some of them will be limiting. Some of them are not going to allow you to build onto the cost saving and the time saving that provide and grow your business. So a lot of work has to come for every new AI device, technology, software that I'm adding into my business. Does it actually, in business terms, give a return back, or does it have a diminishing marginal return every time I add a new one? And it'll be a lot of work on how do you, for every new piece of AI compute that you're adding to your business, does it actually translate back into that business, or am I adding it just for the sake of adding it?
Yeah, that's a great point. Will?
Yeah, it's that's one takeaway that I love, Rabih, is don't just implement for the sake of implementing. Don't just do AI for the sake. I mean, we talked about
For
this
the
a little bit
hype.
this morning. For the hype, overcomplicate processes just because, AI is going to solve all your problems. It's not as easy as this simple plug and play. Some of this will take a lot of work off your plate. Understand the ROI, understand why you're doing this, track the ROI, make sure that, if you have a robot answering your phone or some AI that's tracking all these things, like make sure that you're getting the use out of it. Otherwise, you're going to over-engineer, you're going to overcomplicate, and it's going to leave you with a little bit of a mess.
Yeah. Yeah. Just speaking of the hype, I think you're both alluding to it. I feel like we are a little bit in this phase of like and again, I'm speaking from someone who's not an expert in AI, so let's just go ahead and get that out there. But it does feel a little bit like we're in this phase similar to other things we've seen. If we want to go back to like crypto during 2020, 21, all that, like where it's like, oh, this is remember the whole saying like, oh, crypto solves that or Bitcoin solves that. I feel like we're at a little bit in this phase of like maybe overhyping just a little bit across the board, thinking it's like going to solve every single problem in every single business in every person's life. And I feel like that's going to back off a little bit. Rabih, what do you think about? What are your thoughts on that?
No, I agree. But there is an off-ramp for AI that wasn't existing with blockchain. Because we used to say, oh, blockchain is going to solve this, smart contracts,
Yeah.
general ledgers. We don't even need banks anymore.
None of it's come to fruition at all.
Yes, but something that is a feature of a blockchain network is that there are no new technologies. It was created, it was set up, and that's it. AI with its current capabilities is like that blockchain. It has, a lot of ways it can be introduced and create that synergy. But without a new AI improvement, you're gonna have the same fate as a blockchain hype. There is a hope, man. It's an off-ramp. But there is a hope that AI keeps improving. And once it's improving, maybe the AI of 2026 is, overhyped, but hopefully the AI of 2036 isn't overhyped. That is my hope.
Yeah. And I think it's like anything else where what is left over at the end of it is going to be life-changing. It's like the internet. I think the internet can simultaneously have been overhyped in those moments while simultaneously or at some point, and created a bubble in a lot of ways while also changing the entire world. So I think this is the same concept that I feel like it's like this will change the world if it hasn't already, and it will continue to change the world while also being somewhat overhyped.
Yep.
Will, any thoughts?
Yeah, I feel the exact same way. I'm a little cautionary on like, I just don't truly believe that it will ever replace all tasks that humans can do. I mean, there's some data analytic. It's going to be really good at replacing a lot of data analytics and make a lot of people's jobs better. I just don't see it like wiping out every person's job in the future. I really don't. I'm excited to see where it's going to go from here. But I just can't ever see it being great at empathy and imagination and like problem solving to the extent that the human brain can.
Human connection.
Yeah.
I think one thing that could be here so I agree with you, Will. I was reading articles early this year saying that by the summer we were going to have like all these jobs completely gone. Like by this summer, that AI was taking over like everything by July of 2026. Like it was that aggressive. That's clearly not happening. And I think that's just a lot of people for clicks. But where I do think a real world example, a real world consequence of this that will maybe get worse and worse is the widening gap between the haves and the have-nots. I think AI could accelerate that for sure. So I think that could happen sooner than later. If not, maybe we're already seeing it. So that could be a real concern. But when I say overhyped, it sounds like we're all agreeing it taking over all these jobs by this year or even next year or even sooner than that. I just don't see that coming to fruition. But someone could be hearing this and being like, you guys are idiots. You don't see the future. Maybe I don't. That could be the case. I didn't see it with the NFTs either. So, who knows? But Rabih, any final words on this, or Will, either one of you?
No, if actually someone thinks that we're missing something, send us an email, right?
Yeah, there you go.
I would love to hear the other side of the story.
Podcast at dentistadvisors.com.
Yes. So I would love, out of genuine interest, I want to see the other side of the story.
Yeah, we're going to get hit up. You just wait, Rabih. So did we answer the question, Will? Can it make your business better? We're saying yes, it can.
Yes, it can. It's as a helper, not as a replacer of a professional.
Yeah. And I would say don't be afraid that all of a sudden dentistry is going to go away anytime soon with AI. So, okay, last topic here, number 3. Are you tired of PPOs? Will, I want to get your thoughts because I've certainly heard this, but
I think anyone's going to answer no. This is a rhetorical question,
This
right?
is a rhetorical question,
Yeah.
but I think most people would say absolutely yes. But what we're hearing a lot, Will, and I want to get your take on this from your clients. You work with far more clients than I do at this point. What are you hearing from clients around PPOs staying in network? Just what's the general vibe you're getting?
Yeah, it's tough. It's so tough. It's like there's so many conversations around it, and it's this kind of like, yeah, you just feel a little trapped by them. And this is why obviously everyone's so frustrated by them, because it's this patient base and this revenue cycle that you are on lists and you have this guaranteed butts and seats. But you also are getting pennies on the dollar, not literal pennies, but for the work you're doing. And there's just this point where it doesn't make sense anymore. And so you got to figure out, are you going to go out of network? Are you going to drop some of a handful of plans that you offer? And it's a constant conversation with our clients around it. And I also have people on the other side of going out of network that are frustrated with being out of network because, they're used to having this constant patient flow. And so there's some that are like, well, should I go back in network? And it's just, I don't know. I don't think it's a problem that is going to be solved anytime soon. We're so entrenched with PPOs, but
yeah, for sure.
I guess I'll just say yes. The answer is that we're all frustrated by it, and I don't know what the solution is. The solution is figure out if you can optimize. It's the word of the day, I think. But how to optimize the plans that you do take, making sure you're getting the most for the dentistry you're doing. And
yeah, I'm with you. I hear this all the time from dentists. It seems to be the topic of 2025 and continuing on to this year of, should we stay in network? Should we do something different? Really diving deeper into like analyzing reimbursements and all that kind of thing. So
reimbursements haven't increased. Inflation has.
Yep.
The expenses of the business have gone up. Collections have not gone up in step because the reimbursements haven't gone up.
Yep, that's exactly right. The two main parts of this is reimbursements have been flat in real terms for a long time. Some have gotten even worse, gone negative in real terms. And then overhead, staff, supplies, tech, all of it's up in dental practices across the board. So those two things combined leads to a squeeze on profits, which is a real problem, which is leading dentists to think there's got to be something to do about this. But you also highlighted something, I think a really great point, Will, and it goes to what we talked about earlier today on the other podcast that'll come out later, which is this: you can't look at this too simply. You can't just be like, you know what? I'm tired of this. I'm going out of network. This takes Christine on our team, our practice strategist, shout out Christine Ewan, would say this takes properly planning this out and being able to strategize and execute the proper, communication plan and how to do this right with both team and staff. She would say it takes 12 to 18 months to do it properly. And I've seen that firsthand. I've seen the clients or the dentists who do it correctly. And then some of the dentists you've highlighted that maybe rushed it a little bit or didn't put in the effort or forethought into it possibly, that ended up really struggling. I think it's just something to be more intentional with. Really quick stat, I want to throw it to Rabih, but according to the ADA Health Policy Institute, 35% of dentists say they're planning to drop at least one PPO in 2026. That actually seemed low to me, to be honest. I would think that's much higher, but I'm also admitting selection bias here, because it feels like 95% of clients we talk to are considering dropping PPOs, but that seemed low. But it's given you still at least an idea that a good chunk of dentists out there are considering dropping at least one this year. But let's go to Rabih on this.
No, you guys are more of experts exactly in the dental space than I am, but this seems to me like a trade-off in terms of revenue decision related to any business. Your revenue, you have two trade-offs. I either want something that is predictable and sustainable, but I also want something where I preserve my pricing power, because something that businesses have on top, an employee, is that you have the power to change your prices to maintain your margins. Every single company on this planet raises prices at some point. So you can't give up one to have the other. Will said optimize, also say optimize and balance between these two trade-offs. The trade-off of you need to make sure that you've got sustainable cash flow coming in through these PPOs, but also you don't want to give up the power to raise prices when needed. And if it is hard to, and I'm not saying it's easy to balance, this is a business decision that any business faces it. Like if Dentist Advisors has a subscription model versus, you pay as you go model, it will have to make that decision and try to balance these trade-offs. Every business faces it. It's what I would want to say. If dentists are facing that, do not think that this is a problem that hasn't been solved. It has been solved in other industries. And if you can't do it alone, just bring in consultants, let them look at your business, see where you're positioned compared to other dental offices around you, and what might be the best strategy for you in terms of pricing and in terms of formulating and immunizing your revenue, so you do not miss on any of these two options available.
Yeah, it's a great point, Rabih. And as you're going through that, I just am sitting here thinking how critical it is to make these types of decisions. Like the precursor to that is you have to know your numbers. I think that's where we see dentists get in trouble, is they don't even understand. And because to your point, it's not easy. It's really difficult to understand, like, what is your actual profitability per patient? Like, what are you actually getting for these patients on this plan versus another? You've got to have that data. So when we say know your numbers or be organized, again, Will, to what we talked about earlier, it's not something as someone might say, well, yeah, I track my net worth and I know my collections and I know how much money's in my bank. It's like, great, that's a great start, but you've got to dive so much deeper into this if you want to be able to make quality, kind of optimal decisions to maximize your profit and grow your wealth and build a great business over time. Will, any other thoughts on this or experiences you've had with clients on this?
No, I mean, it can make a huge difference to be on the ball with this and not something that you just let fall by the wayside. There are lots of businesses out there that are built around optimizing PPOs and making sure you are in the best situation, whether that is eventually transitioning to fee for service or taking some baby steps in that direction. We got partners that we would, be more than happy to direct you to if you're interested in learning more. And that, to me, it's one of the lowest hanging fruit optimization things inside of your practice to get paid the most amount of money possible for the dentistry that you're doing.
Yeah. And by the way, you just made a good point. 2 points. Number one, this is not something you should do alone. Like, this is a perfect place to have people in your corner, people that you can be bouncing ideas or helping you strategize something like this. But number two, I think a lot of dentists think when we talk about, like, we hear the language on like dropping this or dropping this insurance, and they immediately think that is going fee for service. I know dentists all understand this, I think, for the most part, but I don't know if they fully like behave this way, that when we say there's a difference in dropping and going fee for service versus saying I'm going out of network. And those two types of planning scenarios are very different. And so I think dentists, again, immediately just think, well, I don't want to go fee for service. It's like, well, there's a step in between that a lot of dentists are executing on and doing it very, very well. But again, it takes planning, it takes communication, it takes people in your corner to help you with that. So shout out Christine again. She's helping dentists with our clients with this stuff all the time. So any other thoughts on this, guys? Any other words of wisdom on the PPO front? Rabih, you're smiling wryly.
I love it. No, I love
it. Okay, awesome. Well, again, we will emphasize that if you are struggling with this or anything we've talked about and you want to talk to us, we are here to help. Dentistadvisors.com. You can book a free consultation. We are happy to talk to you, answer your questions. And then, of course, I should have started with this. I'm sorry, Michelle. Should do this at the beginning. But Dentist Money Summit, guys, we are like 49 days away or something. Rabih, I don't know if you have your speech ready yet. I'm working on mine. I'm not ready, but we're getting there. But Dentist Money Summit, June 11th to the 13th in Midway, Utah. We'd love to have you out. Theme is practice on your terms. We've got talking about leadership, talking about investing with intention, just all around career arc of a dentist. We have an amazing panel this year. And most importantly, you get to come hang out with the DA team. We'd love to have you out. So dentistmoneysummit.com, check it out. For now, Rabih, Will, thanks for being here and sharing your wisdom. Everyone, thanks for listening. That was our 2 cents. Till next time, bye-bye.